I have no doubt that he believes what he says on the free speech side of things, and he's been very vocal about that over a number of years. But I do think some of his commentary about not caring whether Twitter ever makes a profit and only doing this because of free speech is a bit of a furphy, and specifically designed, I think, to convince shareholders of Twitter that they're not going to get a better offer and that this business may never actually be profitable.
Well, 200 million daily users. I mean, Twitter is fairly small by comparison with the other tech giants. Just how high do you think that Twitter's value could go, and how exactly will Musk monetize it?
Look, if you go back 10 years when Twitter first listed, it actually wasn't that different to Facebook back then. And the fact that Facebook has a market capitalisation today, even after its share price falling in half, of $500 billion US, and Twitter was sitting here before Elon Musk turned up with a market capitalisation of $30 billion, I think that tells you all you need to know about the past 10 years. We've had an extraordinary amount of largesse towards staff. Its stock-based compensation last year of $630 million. And you look at the actual Twitter platform, and anyone who uses it would say this is not really that distinguishable from what I was using 10 years ago. And anyone who's received ads on the platform knows that they are woefully untargeted in terms of things that you're actually interested in. And I'm a big user of the platform, and I get ads for the weirdest things ever, and they should know so much more about what I'm interested in, being finance. So it has been really mismanaged for a long period of time. We think the board has done a very bad job. We only invested in this business in 2020 because we thought there were signs of that turning around. So look, it shouldn't be as big as Facebook is, there's no doubt about that, but it should be a much bigger business than it is today. And I actually think it's probably the most sustainable of the social media platforms, because each new generation that comes along, the kids today don't want to be on Facebook. In fact, I've got a 21-year-old niece who's never been on Facebook in her life. Yet I think Twitter attracts a very different cohort of people, and each generation has those geeks and wonks that want to interact on Twitter. So I think, surprisingly, I think it's going to be more sustainable than some of the other social media platforms.
Okay, well, the share price is still lower than the takeover offer. Does this deal represent value, in your opinion, or has Elon Musk overpaid?
Look, we are a little bit torn. This is one of the largest investments in our international shares fund. So to get a bid at a substantial premium to where the shares were trading a few months ago is welcome news on one hand. And we're in a market at the moment that is extremely volatile. So our capacity to take that money and invest it elsewhere is also fairly prospective at the moment. Look, we really do think, though, that this business is worth 70 or 80 billion US dollars, not the 50 that he's buying it for. And we're pretty confident that you're going to look back in 5 or 10 years' time and say, okay, he made all that noise about free speech, but he's also ended up with a very valuable asset here. And it's actually not complicated. I think there's some pretty simple things you can do here to take cost out of the business, to try and get that advertising algorithm to work better, and to do a lot more on the subscription side of things. So that we think there's another 30 to 40% here, but I doubt that shareholders are going to get to see that based on what we've seen at the moment.
We hear about a lot about regulation in this space. What threat does it pose to Twitter, even if the company is privatised?
I think it's a threat to the deal going ahead, full stop. A lot of people talking today, like Elon Musk has already bought Twitter. Yes, the board has agreed to a deal and agreed to recommend that to its shareholders, but the shareholders still need to vote on this to start with. And then I think there's going to be so much regulatory and political attention on this, as there should be fair, that the risks of it not going through have to be fairly meaningful. So the stock is trading at a 6 or 7% discount to that bid price at the moment. That reflects some of that risk of the deal going through. It probably reflects the potential for there to be a higher bid from someone else as well. Microsoft has been talked about as a potential purchaser of this asset, so there are other people that could come along. But today's market price is really trying to weigh up those competing things at this point in time. It's probably pretty fair, I would say, in terms of giving shareholders at the moment, if you want to take your money off the table today, avoid all of that regulatory risk, it's probably a reasonable option.
Steve Johnson, great to talk to you. Thank you.
Thanks, Kath.